Okay, good afternoon, everyone. Today we're going to continue our discussion on portfolio analytics. So what have we done so far? We have learned to make use of packages like quant mode, performance analytics, portfolio analytics, and even the QMAO package. So we'll have a review first of what we have discussed so far, and then we're going to focus on loading either the prices or the returns using the QMAO, and then proceed with our initial discussion on portfolio analytics. So we have learned that we can download prices that are listed in NASDAQ or in NYSE through Yahoo Finance. We make use of the quant mode package, in particular the get symbols package. So I removed all the objects that we created in the previous lesson. So I'm going to, once again, load these packages. You may do so if you want. Okay, but I'm sure your file has already several objects there. But we're going to review very quickly. Okay, so what have we done before? We have identified the start date and the end date and the tickers. We're going to redo that. So we can make use of the list apply to and combined with get symbols to load the tickers that we identified Okay, sorry class, yung sunlight medyo is affecting my. Okay. All right. So I'm going back to where we ended last time, okay, where we had difficulty downloading, installing the QMAO package, but I hope you're okay now with that. I hope by when you ran a while ago the library QMAO, you were able to access it. Okay, so let's repeat what we have done so far. We created this object tickers, and tickers contain this character vector of IBM, the Bank of America, the Wells Fargo, American Express, I think this is the Tower Semiconductor, and then Pfizer. Okay, and then we also defined what the start and the end uh, dates are: 2018 1/1 and 2023 12/31. This is good practice, class. This is good practice because you're able to, if you want to change the stocks that you're downloading, you can just change the tickers, the names here, or the dates. Okay, and then everything, if you run the code chunk again, everything will automatically will run as per the objects here. Okay, unlike identifying here the assets. Okay, so this is a better approach. Okay, so I'm going to run this because I deleted this a while ago. So I can now see that in my environment window under the values. These are not data, these are just vectors. I have the character vector for end and start, and also the tickers. Okay, so last time we said that we're going to make use of the QMAO package, in particular the make price frame. Before we can generate a price frame containing the tickers, the objects as defined in the tickers, we will have to run first this one. Okay, so get symbols, then identify natin yung asset natin, and then we identify the start date and the end date and what type of prices do we want. It's daily. Okay, and then auto.assign is equal to true. So this means R will automatically give the same name to our of the tickers to our object. Okay, so I'm loading this now. I'm running this, and I'll begin to see here under data the 6 objects that are named in tickers. So American Express, this is Bank of America, IBM, Pfizer, Tower Semiconductor, and then the Wells Fargo. All right. Okay, so it identified here the XTS objects that we have. Okay, then after we have defined, we have used the get symbols, okay, and we know the get symbols, for example, the American Express contain OHLC, diba? Opening, high, low, close, volume, and then the adjusted. If we want to generate a data frame or an XTS object just containing the adjusted prices of the six stocks here, then that's very easy to do, making use of the quant mode, okay, quant mode QMAO function called make price frame. Okay, so here I'm creating this object PF, price frame. You can name it any way you want, of course. And then I'm going to use the package QMAO. Under that is the function make price frame. So I'm going to identify what am I going to merge as one from the tickers, okay, from the tickers object, and then start date, end date, and then anong preference natin? Adjusted, or if you want the closing. And usually, pag analysis, mas maganda yung adjusted prices. And then na.omit is equal to true, and then silent is equal to true. Okay, and then view PF. So I can now run this because this make price frame will now run. Okay, because the objects under tickers are already existing in my data here. Okay, had I, okay, so let me, for example, had I deleted, if I don't have these objects, these six objects here, then this will not run. Okay, kasi hindi niya maintindihan kung ano yung walang object defined dun sa tickers eh. It does not exist here. Okay, so let me run this. And we can see here okay, so this is now the price frame. Okay, did you get this, class? Na.omit is equal to true, so wala naman ditong ano, no? Nothing here. Where's that? I'll close this. PF here. Okay, nothing to worry about NA. Kasi usually the stock prices that we get from Yahoo are all complete. Okay, so no issue with the NA here. Okay, and these are all adjusted prices. Okay, any questions so far about this make price frame? So we were able to generate this object PF, which consists of the adjusted prices of all the assets as defined in the tickers. May I have your comment, please, if you were able to get to end get the output that we want. Okay, good. Now, similarly, class, there is another function, okay, and it's shorter than make price frame, and it's called PF. Okay, price frame then, but PF. So we can do this. I'm now creating an object called PF1. So this is distinct from the PF1 a while ago, so we can compare. And then PF1 tickers, start and prefer adjusted, and A.omit and silent. And then let's generate PF1. And then tell me, class, kindly chat if it's similar to the PF object that we just created. Okay, so I'm going to run this. Okay. So are they the same, class? Okay, good. I hope the others are able to follow. Let's give them a few more seconds. All right. Thank you so much for your feedback. Okay. Now, from this PF1 object, we can now generate the returns. Okay, and we learned how to compute for that the daily return function, the return that calculate, the del function, okay, or even manually creating the an object with a formula. Okay, but however, the QMAO package contain also a particular function called make return frame. So in other words, you can dispense with the process of getting the price frame, okay, and then computing the returns by going directly to this function make return frame. So to make return frame class does not need the PF object. Okay, it just needs the stickers. Tapos bahala na siya mag-compute ng returns. So we identified again yung from at saka and. Tapos yung what's our what do we want to be downloaded or to be computed? Okay? So because this is still coming from this one, no? Wala tayong ano ang assumption natin dito, we don't have any object called PF. Okay, so we have the different tickers. We have this, the different tickers. So we can identify what do we want to what returns do we want computed. So is it the adjusted or the closing, and then the type either continuous or discrete. Okay, we know discrete is simple returns. It's just the ratio of your price at time t over price at time t minus 1 and then minus 1. For continuous, it's the log returns. It's the log of price at time t over price at time t minus 1. Okay, so usually what's used is continuous or log returns. All right, so here, okay, I'm generating an object called RF. Okay, and then we have here na.omit is equal to true, which means that if there are missing values plus na values, then it will uh, it will not include that. Okay, so please tell me what happened when you run this. Okay, so let's create this RF1 and then let's view it and let's see what happened. So is there an na value? Okay, thank you. There's an answer here. Okay, thank you, Russell. Russell said that the first row is an 8. Did everyone get the same? Was the first row equal to an A also? Okay, good. Thank you for your feedback. Now, apparently, yung NA dito is the NA dun sa dataset. Hindi, it's not the NA that's generated by calculating the returns. Okay? So take note of that. This one will not delete the NA value generated by the computation. This is an NA.omit when we load the objects, okay, the adjusted prices. Okay, so if we want to automatically remove the NA, we can just use NA.omit. Okay, so we know this already. NA.omit, open parentheses, and then I'll just have to close this. Okay, so that's one way. So if you try class to run that, so do you still have the NA value there? What happened to your RF, the return frame object? Okay, good. Wala nang NA. Okay, omitted the NA. Of course, you can use another line here. For example, RF, channel operator, and then RF, and then bracket, -1. So just remove the first row. That will do, class. But if we can just have one line of code for that, then the better. Okay, so we have generated the RF object, which is our. Run this. Run this. So now prints my RF. Okay, so we now have the returns of the individual assets for the whole period from January 3, 2018 up to the last trading day of 2023, December. Okay. Now, aside from this class, just like the one a while ago, yung PF tsaka make price frame, there's also this function RF. So we can make use of this. I'm creating this object RF1, and then same thing, and AWE. And then instead of make return frame, I'm going to use the RF return, shortcut RF. Okay, same thing, same syntax, and then I'll just give it another name, RF1, so that we can compare. RF1. Okay, so do we have the same output as RF? So please chat. Can we compare RF and RF1 and tell me if they're the same? Is the make return frame function the same as RF? Okay, good. Thank you so much, class, for your feedback. Okay. Are there any questions so far? Okay, so let me again request you to please chat. Are we clear so far? Yes lang or no? Kung may mga questions kayo, please. Please don't be ashamed to ask questions. Right? And I hope everybody's participating. There are 36 students now. So far, hindi tayo nangangalahatin ng reply. 14 out of 36. How about the others? Are you following? All right, thank you. Thank you so much. But I still would want a really 100% participation rate. Okay, now if you take a look at our RF or RF1, this is the return of IBM, a daily return. So that means it compared the price at time t and time t minus 1. So why don't we get, let's just open IBM. IBM. Okay, this is IBM, and we're using the log. So if we get this. So that's the log of price at time t, control C divided by price at time t. Okay, so this is just the same as log of price at time t minus log of price at time t minus 1. Okay, that's the principle of logarithms. Okay, it's 0.0271111. And if I check the RF, 0.02711171, so exact. Okay, so this is correct, and that's how we get the log returns, daily log returns. Okay, so these are individual returns on a daily basis. So these are daily log returns for IBM, for Bank of America, etc. Now, what if we're interested in creating a portfolio? Let's start with a portfolio of IBM and Bank of America. So how do we compute for the portfolio returns? So let's start with daily returns of a portfolio. What did you learn in your investment class? How do you compute for the returns of the portfolio? So I'm interested in R sub P, okay? R sub P, which is the return of the portfolio of, just interested in two, IBM and Bank of America. Okay, so how do you compute for this class, the R sub P, the return of the portfolio? Okay, so let's get daily returns first. So how do I get the return of the portfolio IBM and Bank of America for January 3, 2018? Anyone? So return of the portfolio class. So I'm assuming I have two assets in my portfolio, IBM and Bank of America, and I want to compute the returns of my IBM and my Bank of America as a portfolio. What have you learned so far, class, about the formula for a portfolio return? And to make it simple, we're just using a two-asset portfolio. Anyone, please? Class, return ng portfolio. Dalawa lang muna, no? Mabilis lang to. IBM and the Bank of America, for example. What was the portfolio return on January 3? January 3, 2020, 2018. Anyone, please? Okay. No answer, class? Waiting for your response. Okay, let me try to call. Okay. Daniel, Mr. Medes Thomas, what do you know about the computation of a portfolio return, daily return, just on January 3?
I'm not too familiar with the formulas, sir.
Not too
Of
familiar.
daily return. Yes, po, sir.
Okay. Sino class? Sino nakakaalam? Sino magvo-volunteer? Angelica? Miss Valencia? Ano yung formula ng return ng portfolio? Miss Valencia?
Hi.
Sorry?
Hi, sir. Hindi po ba yung daily return po yung formula nun?
So ito na? Ito yung return nun? Ito yung daily return ni daily log return ni IBM, no? Ito naman yung daily log return ni Bank of America. But we're creating a portfolio of IBM and Bank of America. Kasi may reason, class, I don't know if you have already a subject on, tapos na ba kayo ng investment analysis class? InvestNat, are you done with that? No? Bakit no? Ba't nauna to? Okay. So, maybe that's the reason why you seem not able to answer that. Anyway, class, ang formula ng portfolio is just the summation of weight times R, or others you see weight times K. So the weight here refers to the weight of the asset. The R or the K refers to the return of the asset. So kailangan natin, class, yung weight. So sa isang portfolio kasi, ilan yung value dyan ni IBM, ilan ni Bank of America. Okay, so let's assume that 50-50 yung portfolio natin. 50% IBM, 50% Bank of America. Okay, how do you get the portfolio for January 3? January 3 ng 2018. Okay, paano, class? Using this formula, summation ng weight ng asset multiplied by the return of the asset. Ano ko lang siya, click muna. Okay. So I'm going to copy this. Control C, Control V. Okay, so this is the return of log returns of IBM on February 3. Okay, so sabi nga natin ang formula, sum of your weight multiplied by your return. So si IBM, ang weight niya, 0.5, di ba? 0.5. So I'm multiplying 0.5 by the return of IBM on that day. And then multiply by 0.5 then si Bank of America times its return on that specific day. All right? So this is just the weighted average. No? 5% kay IBM, 5% kay BAC on that specific day. Siyempre, pag ibang days, iba na yung returns nila, no? Kasi, di ba, ang formula nito, summation of Y sub I times K sub I. Now, unless na baguhin yung weights, yung weight will be 50-50. Okay, so if I run this, so it's supposed to be 0.0118838. That's the portfolio return. Kasi isang return lang, kasi isang portfolio lang yan eh, no? Yung IBM at saka PAC. Okay, let's try to compute this, class. Okay, let's compute this. So, mag-create muna tayo ng isang portfolio ni IBM at saka ni Bank of America. So, I'm sure you understand this. So, port 1, we're subsetting the RF object. Ito yung RF object natin, di ba? Yung return frame. We're just subsetting 1 and 2. IBM lang at saka si Bank of America. Okay, so that's how you subset, di ba? So empty row here means all the rows included, pero yung columns, column 1 to column 2 lang. And then, can you tell me, class, what happens if you view port 1? Okay, please, what do you get, class? If you run to create that object port 1, and then i-print natin siya sa tabs natin diyan. What are you getting? Ilang columns, okay? Ilang rows? How many rows? How many columns? Okay, 2 columns, 1508 rows. Okay, check na natin and row ng RF. 1508 and row ng our object is port 1. Okay, they should be the same, class, no? Ay, hindi ko pa naroon to. Okay. So this is my port 1 portfolio. Oops, asan na yan? Okay, ang portfolio 1 ko, class, is just IBM and BAC. 2 columns kasi we just subset. Sinubset lang natin si RF, yung unang dalawang columns lang. All right, now we need to compute for the returns, di ba? So we're going to make use of this function. Okay, once again, galing kay performance analytics. There's a function called return.portfolio. Okay, thank you for your answers. You're all correct. Thank you. So si performance analytics may function siya, return.portfolio. Okay, so we're going to use that. Okay. Anong portfolio ang co-computing ng returns? Port 1. The portfolio that we created on IBM and BAC. And then kailangan yung weights. Kasi di ba pag portfolio returns, kailangan alam yung weights para i-compute yung W sub I, R sub I. Okay? And then please tell me what you get, class, if you run this. Waiting for you, class. What are you getting for port 1 ref? Okay. One column na lang, Jenica, no? Now, Jenica, bakit kaya one column na lang? Okay, you're correct. One column na lang si port 1 red, no? Now, why do you think there is only one column? Di ba
Sir,
dalawang...
because it's the
Yes.
portfolio returns na lang.
Okay. And so, kung portfolio returns, ano siya, class? Ano yung formula ng portfolio returns, Jenica?
Sir, it's the one that we did kanina, the 0.5 times the first
Yeah.
row plus
Ah.
0.5 times the
Okay.
other
So,
first row.
yeah, the generic formula is W sub I times R sub I, right? Ito yung return ng portfolio natin. No? Where the W sub I is your vector of weights, yung R sub I naman yung vector ng returns. Okay, so a while ago, nakita natin yung port 1 natin, di ba? Okay, and we computed for this one, ito. Ito yung return ng day 1 for IBM, return ng day 1 for Bank of America. And then we got 50% of that and 50% of that, and we get 0.0018858, no? And what's this? 1.188358 e to the negative 2, which means you move 2 places to the left. No? 1, 2. So that's 0.0118838. 101188358. So exactly the same plus. Correct. And of course, we can validate if the computations are correct. And I guarantee you, correct siya. And yung portfolio returns natin class, isang column na lang, di ba? Isang column na lang siya. Okay, it's only one column. And siguro, close natin to. Here. Okay, isa na tayo. We're here, no? And yung column names lang, gawin na natin. Call names a port 1, return natin. Let's change the name kasi ito, portfolio returns. So, gawin natin port 1 red. No? If you run this, ay, wait. Ano nangyari? Port 1. No, I go, sorry. Tama, tama. I was looking at this one. This na pala. Okay. So yan, binago lang niya yung binago lang natin column niya. Okay, are we clear so far, class? Clear so far? Please chat. Clear tayo so far. Okay, thank you. Okay, I hope the others are able to follow. No? Okay, thank you. And a while ago, may nagtanong lang kanina ng ano, paano ipa-plot yan, yung returns. Take note yung port 1 natin times XTS object yan, no? Okay, so this can easily be plotted using ggplot or kahit yung plot function lang. So just for the purpose of discussing it with you. So ito yung portrait natin, port 1 red. So this is the return of the portfolio. So definitely we can use ARIMA for this one. Okay, for those of you who were my students before already, we can use autoregressive integrated moving average model for this one. However, magkaka-problem tayo kasi may mga volatility clustering tayo dito, no? Which necessitates that we use the Garch model for this one. Anyway, nabanggit ko lang. No? So, okay, let me go back here. Okay, now next is, let's discuss this. me share this in the chat box. All right, so kindly copy that and post it to your, copy paste it to your notes. All right, there's this concept called rebalancing. Okay, so initially, for example, you want to have in your portfolio 50%, let's say stocks, 50% bonds. Okay, now we know that the values of these assets would change over time. Okay, chances are after 1 week or after 1 month, iba na yung value ng stocks natin, iba na yung value ng bonds. So what will happen is that the initial intent for us to have a 50-50 portfolio might change already. So baka yung asset natin, yung stocks natin nag-appreciate na siya. So it will have now a larger value as compared to the bonds. So hindi na magiging 50-50 yung ano natin, portfolio natin. Sabi natin naging 70-30 na, no? And based on our investment plan, gusto natin na yung asset natin, yung portfolio natin, maintain yung balance natin, yung balance ng stocks at saka ng bonds at 50-50. So there's a concept called rebalancing. Okay, so what's rebalancing, class? It refers to the process of, we would like to put back, no, the mix, the portfolio mix of our portfolio to the level that we want it initially. So kunyari, gusto natin 50-50 para mas ma-mitigate yung risk dun sa assets, sa stocks, no? Kasi mas risky yung stocks generally kaysa bonds. So pag nag 70-30 na yan, 70 yung stocks natin, 13 bonds, mas malaki na yung risk natin dyan. And let's say your risk appetite dictate that you don't want that. Gusto mo lang balance lang yung portfolio mo at 50-50. So what happens is that magre-rebalancing ka. So at a particular period of time, kunyari after one month or 1 quarter or 6 months. Okay, but take note, what does rebalancing involve? Rebalancing involves that you sell off some of your assets to buy the other assets. So I have here an example. No? So ito, rebalancing, class, involves periodically buying or selling the assets in a portfolio to regain and maintain that original desired level of asset allocation. Okay, so kung 50-50 dati, gusto mong ganun yung target mo, and then over time, nag-up yung value ng stocks natin, nag-appreciate. So let's say naging 70-30 na, 70% na yung sa portfolio natin na stocks. So what do you have to do in this case? The investor may then decide to sell some of the stocks and buy bonds to realign the percentage back to the original target of 50-50. Okay, however, class, of course, we know that any transaction will have costs. May transactional costs yan. So it doesn't make sense, for example, to have a frequency of, unless talagang napaka liquid mo, tapos gusto mong weekly, talagang nababalance lagi, which for most class is not a quote-unquote healthy thing to do. Kasi may cost nga yan, may transactional cost yan. So pwede ma-dissipate yung value ng investment mo. Okay? So sometimes yung iba every 6 months, yung iba every 1 year. For our example, let's just make it kasi hindi naman totoo to, no? Sabihin natin magre-rebalancing tayo every 30 days, every month, no? Okay? So what will happen? Ang mangyayari, class, sa ano natin, sa portfolio natin, so after 30 days, no, after 31 days, depende dun sa date, magre-recalculate, no? Magre-rebalance, ibig sabihin, iibahin na naman yung weight ng asset 1 natin at saka asset 2. Kasi gusto natin 50-50. Okay, so what's the function for that? Take a look at this, class. Okay, we're going to create now another object, port 1 red, this time attach natin si rebalance to distinguish it from the other yung kaninang port 1 red natin. Okay, so same thing from performance analytics. You have returned that portfolio. So our object is port 1, okay? And then we have to define the weight natin Pareho lang to dun sa ano, no? Kanina sa port 1 ret. But this time, nadagdag to. Rebalance on is equal to months. So pwedeng days, pwedeng weeks, pwedeng years, okay? And then tell me, class, what happened to your port 1 ret rebalance. And tell me how different it is from your port 1 ret. So ito yung port 1 ret natin, di ba? Ito yun. Okay? And then we're creating now port 1 ret, which will be rebalanced after monthly. Okay? Of course, dito class, ang computation, it does not consider the transactional cost. So napaka-straightforward na computation to. Okay, tell me now, class, what happened to your port 1 ret rebalance? How does it compare with port 1 ret? Yung walang rebalancing. Feedback, please. Okay, waiting for the others to answer. Meron na, I see one answer here. Okay, two answers. You see, the values just the same. Okay, still similar. So similar. Okay. How about the others, class? Pareho pa rin ba? May hint ako, class, ha? Take note. When does rebalancing occur? On months. So dapat titingnan nyo yung ano, yung end of the month, ba? Kasi doon magre-rebalance eh. After each month, saka siya magre-rebalance. Same, okay. So let's see, class. Let's see kung same nga siya, no? Palitan nga natin nga pala yung call names ito. Call names nitong, naran ko na ba ito? Port, hindi ko pa na, naran ko na. Wait. Panaroon to. Let me run this. And then, palitan ko lang yung port ret. Siya ang pangalan niya. Siya na si port 1 ret. Siya si port 1 ret, diba? Count pa? Wait. Wala siya. I made a mistake here. Meron na ako, no? Okay, so I also have one column. Kasi portfolio returns din yan. So, of IBM and Bank of America. Then, palitan ko lang yung name niya kasi ang pangalan niya is portfolio returns. So, nag-default siya sa ganun generic name. I'll just name it, yung column niya, port 1. Pareho na lang sa port 1 ret rebal. Okay, so I'm just changing the column name, Control Enter. Same on my end. February 1 is a bit different. Okay. So may iba-ibang answer, no? May isa nagsabi na a bit different. Okay. So let's see, class. So I'd like you to create, oops. Exercise na dapat to. Control C. I'm going to check this. Okay, compare natin, class, si port 1 ret and port 1 ret balance. So mag-create tayo ng isang object R1. Okay, port ret to, R2. And then combine natin sila. No? So gawin natin from January 20 hanggang 10 days before, 10 days after. Sige. Okay. So we're creating an object, R1. Siyempre, assign natin. And then, isa-subset natin class. No? So yung object natin, port 1 ret. Okay. I-subset natin siya. Tapos ito din, port 1 ret rebalance. Subset natin siya. Okay. Okay, how do you subset, class?
Training. Gano'n oras ka sa katip? Gano'n oras ka sa katip? Gano'n oras ka dun?
Francis, i-mute kita, ha? Okay. In the interest of time, class, sorry, I can't i-ano lang natin, no? Ang gagawin natin kasi, isa-subset natin si port 1 ret from January 20 hanggang February 10. So, mga 10 days before and 10 days after. Para ma-compare natin, ano? So, 10 days before, that's 2018. Okay? So, 01 and then 20 hanggang 2018, 02, 10. All right? So, we're having port 1 ret, Control C. We're subsetting it. Ang kukunin lang natin yung dates na to. Okay? All right, so let's run this first. So we now have R1. Asan na si R1 natin? So this is R1, no? So this is R1 which contains February 2022 na kasi walang Saturday, Sunday plan 20 and 21. No? Okay? So hanggang, check nyo, class, hanggang February 9. No? So ibig sabihin, pag hindi nasama, ibig sabihin, walang trading day on that time. And then R2, ganun din. No? This should be the same. January 22 then hanggang, all right, February 9. Okay, then let's create, class, let's combine these two. No? Of course, alam nyo, C bind lang yan. C bind of R1 and R2. And then, ay mga returns kasi. Okay, malalaki, no? So let's round this off. Round natin into 6 decimal places na lang. Comma 6. 6 decimal places. Okay, 1, 2, 1, 2. And then i-print natin R3. Okay, so we're combining, class, R1 and R2, rounding off the decimal places into 6 decimal places, and then printing R3. Let's run this, Control Enter. Oh, there you go. All right. So, nung January 22, pareho lang sila, class, no? Pareho lang, 24, 25, 26. It should be the same. Kasi hindi pa tayo nagre-rebalance. At the end of January class, yan. At the end of that, magre-rebalance tayo. Kaya take note, ano na yung portfolio returns, no? ng port 1 ret at saka port 1 ret rebalance. Magkaiba na, no? In this instance, mas malaki yung sa port 1 ret. But that yung may mga cases na mas malaki naman si port 1 ret rebalance. All right? And then let's check class, no? What if it was 2018 January, gawin natin February. February hanggang 2018 03. Wait. Hanggang March, no? February to March. So ganun din to. February 2020 hanggang March 10. Okay? So binago ko lang class, ginawa kong February to March. February to March, and then let's print this. Okay. So take note class na nung February 20, magkaiba na yan, no? Okay? They're now different. Pagdating ng March, magkaiba pa rin sila. Okay, kasi simula nung February 1, nag-rebalance ka na eh. So ibig sabihin, iba na yung sa not rebalance, it will just take the usual yung kung ano man yung values tapos weights ganun pa rin, no? Itong rebalancing naman, it will make sure that yung weights babalik sa 50-50. Yung walang rebalancing, bago na yan, baka 20-80-20 na yan or 70-30, and you're not adjusting, you're just leaving it as it is. So pareho lang siya nung first month January but at the beginning of February kasi magre-rebalance na, magkaiba na sila. Okay? All right, so any questions so far? Clear ba to, class? Clear to, class, yung compare natin si R1 at saka si R2. Okay, so mukhang clear, no? All right, so let's have the whole comparison. Okay, let's create this object, all port 1 ret. Okay, isi-bind natin si port 1 ret at saka si port 1 ret rebalance. So ito, the whole object to, no? Kanina ang sinibind lang natin si R1 at saka R2. So ito, the whole set of port 1 returns, ito naman yung rebalance returns. And then baguhin natin yung pangalan kasi ang port 1 returns is port 1 return, port 1 ret pa rin yun eh, no? So gawin natin, call names ng all port ret is non-rebalance at saka monthly rebalance. Okay? So let's run this class. Control Enter. All right, I'll let you write it first. Gusto ko kayo mag-write ng niyang class. Tagalin na natin tab 1 dito. Okay, are you done with this class? Na-create na ba si all port 1 ret? If so, class, kindly chat please if you have created that, so that I know if you have created this all port 1 ret. So kung rinan nyo yan, dapat meron kayong all port 1 ret. You should have this object which contains 1,500 entries. Diba? Yan, 1,508 entries. Ang first column natin yung non-rebalance, yung second natin yung monthly rebalance. And as we said a while ago, yung first month nito, parehong-pareho lang yan kasi parehong object naman yung tinitingnan natin. Wala pang rebalancing yan eh. Pero hanggang dulo, class, tingnan natin, magkaiba na sila, no? Okay, ito 3.3, ito 3.8. So they're practically different already. Okay, then what we're going to do, class, is good thing again, si performance analytics, meron siyang function ng table.annualized returns. Okay? So ipapakompute natin yung annualized returns, and this will consist of, ano ko nga to? Okay. So ang function natin, table.annualized returns, and then sinong pinapakompute natin annualized returns? Yung object na all port 1 ret, which consists of two, di ba? Yung not rebalance at saka yung monthly rebalance. And then kailangan natin isama yung risk-free rate, no? To compute for the Sharpe ratio, kasi i-compute niya yung Sharpe ratio. Okay? And then tingnan natin to class, no? Control C. Dito na lang sa ano, sa I'm just copying the function table annualized returns. Okay, again, it's important class to nasaan yan? Ayan. Ito. Table annualized returns nasa, I'm sorry, ano ba yung sinabi ko? Ayan, performance analytics class, no? And it's a table of annualized return, annualized standard deviation, and annualized Sharpe ratio. Okay? Bago makalimutan class, i-send ko lang dito yung asan na si Sharpe ratio ko? All right, I'll just for the benefit of those who have not met, Control C, kung ano yung Sharpe ratio. Okay, I gave the LaTeX here, and then just some. Di ko alam class kung na-meet yun natin yung Sharpe ratio sa mga investment subjects nyo, but that's a very important measure. So it's standardized returns actually, no? Standardized excess returns. Okay, so the function is this one. Okay, we have to define the risk-free rate, which is 0.06. However, ang sabi dito sa syntax class, ito, no? So ito yung returns object, may scale siya. Yan, risk-free rate. Kailangan natin ilagay, no? Yung risk-free rate, sabi dito, in same period as your returns. Now, yung returns natin class, it's daily returns. So daily. So dapat daily din yung risk-free rate natin. Let's assume class that the risk-free rate is, inassume ko dito na 6%. Babaan na lang natin, usually hindi naman umaabot ng 3. Gawin lang natin 3%. No? 3% yung risk-free rate, American setting. And then, since daily yung returns natin, this one, we have to convert into daily then. Kasi yung 3% na yan, annual returns yan. So to convert your annual into daily, divide natin ng 252. There are 252 trading days a year. Okay, so i-run natin to. So you can see here, okay, ano nangyari? Ba't ako may error? Table.annualized returns, all port. 1, 2. Saan ako nagkamali? Okay. Baka may dali class. Ibabalik ko lang dito sa sa line na to. All portrait, tama naman. And then RF is 1 parenthesis lang. No? 0.03 divided by 252. Okay, 1 parenthesis. Unexpected error in meron na ba akong all portrait? Yeah, meron na. Okay, try again. Ayan, okay na. Okay. Nawala yata yung kama ko kanina. Alright, so take a look at this class. Comparing yung non-rebalance natin at saka monthly rebalance. It turns out that annualized return natin for the rebalance is higher. It doesn't always happen that way, class. In this case, mas mataas yung monthly rebalance natin. And the standard deviation is a bit lower. Ito 2676, ito 2677. Okay? So mas mataas na ngayon annualized return, mas mataas pa yung standard deviation. Mas mababa. So it's a lot better yung monthly rebalance. And if you compare the annualized Sharpe ratio, although both are negative, mas malaking negative si non-rebalance kaysa kay monthly rebalance. It's a lower negative. So, okay, this is the formula, class, for your Sharpe ratio. Okay, it's your return of the portfolio minus risk-free rate divided by your standard deviation of your portfolio. So this is just like a standardized It's a standardized excess returns. Ang tawag natin dito, class, sa taas, excess returns to. It's a difference between your return and your risk-free rate. All right. Okay, so sorry. It's almost time, class. So next meeting, okay, so we're at the same pace as your classmates in the other section. Okay, next meeting, class, itutuloy naman natin to. Portfolio using 6 assets na, no? So ganun din, return that portfolio. Yung object natin is our RF. Okay? And then, kailangan natin ng weights ng 6 na asset. So we'll just make it equally weighted pa rin. 16, 16, 16, 16, 16, 16. And then, i-rebalance din natin siya. No? So, ganun din to, class. Okay? With rebalancing tayo. Alright? And then, we're going to start through the ganun din, class. Ipapaano natin. Ito, lumalabas dito, class, na for the whole portfolio, yung 6 na assets, ang annualized return natin dito sa non-rebalance, negative. Dito positive. Although yung standard deviation natin ng monthly rebalance is this time, it's higher here. And then, mas malaking negative yung sa Sharpe ratio ng non-rebalance. So, mas better yung monthly rebalance in this case. All right? And then, we're going to go to the portfolio optimization proper. Ito na. Kasi ito lang yung portfolio natin, di ba? 16, 16, 16, 16, 16, 16. Yung ba talaga dapat yung magandang weight? Okay, so we're going to answer the question, anong portfolio mix? What portfolio mix will give us the highest possible return? Or what portfolio mix will give us the lowest possible risk? So that's now in the province of portfolio optimization, and we will be needing the package portfolio analytics. Okay, so thank you so much, class. I'll stop recording now.